And we are live. What's up, everybody? Back with another trading day, 50K account. We're in profit. 5 profitable days in a row puts us at 544760. I'm feeling good. I'm feeling good. But we don't want to get hubris. Okay, we don't want to let hubris determine our actions. We're still going to trade the way we've been trading. And if it doesn't pan out, it doesn't pan out. But don't get emotional. That's the goal of today. Welcome. I hope you're having a good day. Beautiful. Not really beautiful, but yeah, every day is beautiful. Why not? No matter the weather, it's good to be alive. April 17, 2024. We got 3 topics for the day, which are the future plans of my channel. Okay, I've been going live. Haven't really been creating videos that are more, have a topic or have a specific goal to showcase something. And again, this is not a channel where you come to learn how to trade. This is a follow my journey type of channel. Okay, you're here, welcome. I'm glad, but you're not gonna learn much. Oh, it's done. Yeah, you're not gonna learn much. Okay, it's gonna be one of the gang. That's what it is. You're one of the gang. So as I teach myself, I make videos because I like making videos. And then you join me. That's it. And today, I got a video cooking. Okay, well, I'm not gonna go into it, but we're gonna talk about the future plans for my channel, this channel. But I have been going live pretty consistently, so watch the playlist. I have arranged all the videos in the playlist so you can, pick one you like. Maybe I'll add down the road, once maybe I finish this evaluation, I'll add titles that represent what went on the live stream. That way, they're past. But since they're live, you can't really know what's gonna happen as far as results for the day. But I think if I put on the description or maybe even in the title something that, some kind of explanation as to what happened that day, it'd probably be more likely to be enjoyable, because then you can, pretty much check out what happened without having to watch the whole video, because they are pretty long. They're about an hour plus videos. The second topic is the Bitcoin halvening. Okay, if you ever hear anybody talk about the Bitcoin halving, tell them, say, what are you talking about? I don't know what you're talking about. Sorry guys, technical difficulties. There we go. Okay, if somebody says, oh, the Bitcoin halving, I don't know what that is, you're gonna have to explain it to me. Now, if they say the Bitcoin halvening, then then that person knows what Bitcoin halvening is. Okay, then you can chill and talk about it. Good. We're going down, Houston. We're going down. All right. So the only way to talk about the Bitcoin halving is if we talk about the Bitcoin halvening, because we are in it for the long run. That's the difference between the person that says halving and halvening, but we'll talk about it. Disclaimer: the content presented in this video is for entertainment and educational purposes only. The views and opinions expressed are solely those of the creator and should not be construed as financial advice. The creator assumes no responsibility for any losses or damages arising from the use of this content. The creator does not sell any products or services, nor is affiliated with any of the trading platforms or tools mentioned. It is important to conduct your own research or consult with a professional before making any investment decisions, as trading involves risk. So that's the second topic, the Bitcoin halvening. All right. So not the halving. That's not what we're going to talk about, because we are here from a while back and we are here to stay. Okay. Number 3 on the series of topics is going to be sense of urgency. In order to succeed at trading or whatever else, does there need to be a sense of urgency? And maybe urgency is not the right word. Maybe the word is, actually, I think it is the right word. Because urgency, it's, a little bit synonymous with fear. Okay, urgent. Well, not really. It's associated with the word. Let's say another word. Danger. Okay, urgency and danger could be somewhat similar, and we'll discuss it. Okay, I think it's a good topic because you'll get what I mean by urgency, but there's a belief in me that in order to be really successful at something, the people that are very successful at something, it's kind of like they have a deficiency and they want to fill that deficiency, or it's like a void that they have with a sense of maybe of fear, of lack of very negative emotions. And in order to suppress that feeling, they become very successful. So we'll talk about it. I know you might not agree, and we're going to discuss it, because that's not the main point. That's not my main point. That's just the topic. The topic is whether or not there needs to be a sense of urgency in order to succeed at anything, especially trading, because with trading, that sense of urgency becomes very real, very quick. All right, let's get started. So we're gonna do a top-down analysis. I'm gonna check check everything is good. Yeah, looks like we're live and no one's here. That's okay. That's okay. I've noticed that sometimes I'm gonna get used to putting this graph over here and not here where my face is, right? Somewhere over here. Okay, so we're gonna play over here. Okay, so on the 30-minute, we've got the low put in, which just happened. So now we're gonna take that into account. But before that, before that low that was ran, we had the little range here. And it actually went all the way up here. I didn't notice. And should we ignore the wick? No, we're not gonna ignore the wick, because this price closed higher than where this price closed. And I know that may not make sense to anyone except me, but that's fine, because I'm the one trading here. So this wick was the high. We could ignore it, because look at where it is. It's all the way down here. So if we ignore that, then this is the high, or this one right here, right? We ignore that wick. But since price traded higher than the close, well, of course, than the close of the candle, but not only that, traded higher than this highs here. And even with a break, a clean break where the candles closed above that area. And because of all those reasons, this high, in my opinion, becomes a little more relevant. And then we have the low that was put in first, which is right here, which is where we are. If you see, this just a wick, so We might live up from there if we're going up, and if we live from there. So this high here ran this high, but very abruptly came down. So we got a very bullish indication on this one candle here, and especially after that, price didn't trade higher until it did, and it broke the highs here with a clean break, but did not break this high. That's why I think this high is important, because price broke every single other high except that one, except the wick basically. So next time the price comes back around, maybe it wants to close some candles in this area and maybe trade higher. So we're in an interesting area. This is the type of area I like to long from, because we have steep drops, and then I like to look for that fractal nature of price. Like this one, for example, like it's dropping here, catch this one to the upside, take my profits a little bit below I would actually take my profits around here. I mean, ideally, I'm not saying that's exactly what I do all the time, because I'm very emotional as we all are, but if I can do it well, I would take my profit here, from here, for example, maybe here to here, and that's a really good amount of profit. That's a really good trade. You can hold on to it, because look, it looks like it's gonna run this high again, especially because we had this high put in. We're thinking the high is much higher, but then look, bam, okay, denied. And that's why after a break, after a trade like this, we cannot trade again and actually take your profit here. Don't try to take your profit outside the zones, especially this ones. Not because it might not go up, because it did eventually, but look what happened before it went up. It took so much people out that were trying to long. And then when people were trying, okay, I lost all my money already, I'm gonna start to short. Oh, you want to short? Bam. You see what I mean? So the half of that area would be around here. I like this tap here, this high here. There's a tap, there's the little wick, so we will take half those two wicks. Yeah, this area is good for the 50%. There's a fractal here. That's the low. This is the low that created the new high. So there's the semi-protected low, or should have been a bit more protected, but it didn't run this high. Didn't run this high. So what happened? Boom. And again, you could have taken an order. If you see this upside, maybe you don't get in here, but you get in on this candle, would have been a good entry on the upside. You see the breaks, you see especially the break of this high here. This is 30-minute, by the way, so these candles do take a while to play out. You break this high, look at this candle, super bullish with no wick. Okay, so there's indications all around here that price wants to trade higher, and then you get the reversal, the run of the low, but look how it didn't even go inside the candle open here. So that's a good sign for the upside. Maybe you get in here, right? No wick, let's say here, and you take this, and you could hang on all the way. But remember, I like to get my profits on this area here. So I would go from here to here, just a quick scalp. All right. Now, if you're a swing trader, that's a totally different game. I'm not talking about that. I'm talking about quick moves to get few points. Don't risk too much. I don't like when they have so many. Let's go to the 10-minute chart. We got this low here put in, which was ran multiple times. Let's see what happens if we do that. We'll see what happens if we go from this low to this high. It's the same move essentially, of course, but you can see a lot more deeper move on this candle because it's a longer time frame. So on the other one, they were just wicks. So let's see here what happens on this little move here. I actually placed an entry. Let me show you guys, sorry. I'm very into the trade, so. Okay, what happened? Yeah, I lost it. 5 points. I try to go up. I saw a little move on the lower time frame. Sorry, guys. I should not have done that, but that's fine. That's fine. 100 bucks. It's early. We're not worried. We're not worried. Okay, so let's go back to the 10-minute. Yeah, look, it does want to go up. The problem with that is I didn't risk enough for that specific trade. I was kind of convinced, but look at that, how it wants to go up now. Let's see. Let's show you the 1 minute first, and let's show you my order. So you see I wanted to go up, it went down, and then it went up again. But this is a good area to long from if we can get a better price all the way down here, but it might leave sooner. I think that's why I took the order, because I saw this little flip. And especially here, look at where I took the order before this candle closed. So this candle closed very bullish. Had I seen that, would have given me indication not to get in, but it was playing out. But I did like how it quickly ran this high. One thing I should have noticed though is that this high did not break this one, and that probably should have gave me less bullish indications. The fact that this didn't run this one in the 1 minute meant that, yeah, price can go higher, but not as a bullish flip like we always tend to see. So it might not play out yet. Now this area here, that's a really good area to get in. Now we have that low put in. But it's also an area that could just get wiped. So we're gonna wait. Yeah, that's a good lesson for today, and I'm actually gonna make a note of that. The previous candle was huge like this, right? So if we want to be bullish, we'd have to see like an engulfing candle here. And if you take these two candles, then it kind of is in some time frame. Look, you see that? That's a good move right there. It's a good move right there. It's a deep mitigation of the low, but it might go up. And maybe take a short from here. It would be even wiser, but we'll see how strong the momentum is on the upside. And I really hope we don't. I really hope we go lower, because we could get better price for our scalp up. So yeah, so on flips, wait for the setup that contains an engulfing candle. next to the lowest or highest candle of the trend right next to it. And I'll do a drawing. So it'll be this candle, and then this candle, and then this candle here. And no. All right, guys, cool. You see, you can short from there. That was the play. That was a good play. That's what happens when you lose a trade. It's like it knocks your confidence right out of you. It's like somebody punched you in the gut and the air is out. You know, it's not as it doesn't tell the story of what happened. It's not just $100, because considering the totality of circumstances, that's not a big deal. But it just hurts like $1,000. Sometimes $1,000 loss doesn't hurt as much as $100, because it depends how you've been doing in the past, right? If you've been losing $3,000 daily, and then you lose $1,000, man, that's not a big deal. Oh, look at that entry right there. That was it. And I said, you know, we should short from this top. Oh, look, it's hitting the area there. Oh, I'm in the 20-second, no wonder. I mean, it was too juicy to pass. Yeah, denied. That's what I get. That's what I get. That's what I get for being impatient. It was so quick that I could have just not taken the trade, but I just didn't want to miss on the quick flip up. 5 points again. 2 bad losses. And we're at the 17,000s now. I mean, I should know better. Once we hit those levels, I mean, we are in a bullish market. Look at this. I mean, bearish. Sorry. We're in a very bearish market. Very bearish. Wow. You know, after those 2 trades, guys, what was I doing? What was I doing trying too long? Now look. Now that was the one. Of course, that's the kind of. But of course, it's not gonna give it to me where I think. It's gonna give it to me where my stop loss would be if I was a swing trader. Oh man, we should have dissected the charts first, dissected the 1 minute. And no, well, we know where we are. We've been trading every day, so we know where we are. We're dropping very consistently for the past 2 weeks. But it's okay. You know, that's part of it. 240, that can be recovered. So let's go to the 5-minute chart here. Let's see what lows we see over here. Nothing. I mean, there's really nothing to the left for a long time. All the way over here. Look at that. No, this is no indication, but we will still. That's the only indication we have. And this is where we are. So good place to long from. Definitely a good place to long from. Look at that. That's what I should have done earlier. Just wait for that area instead of trying to be all intuitive type trader. I'm not ready for that. as we can tell. This is better. This is better for me. Oh man, this is not the one. Yeah, it's kind of hot. Well, you know, we had such bullish days for the past, ever since like even in the Christmas time and stuff, like December and stuff, there was bull runs everywhere, you know. Everything's going crazy. What do you think is gonna happen? People are gonna start spending more, and what happens? They start taking from their investments accounts and all their holdings in assets or whatever it is. They just start doing that because, let's be real, guys, prices are getting higher. And that's not a problem, right? That's not a problem. The problem is that the wages are not getting higher. That's the problem. It's fine, you know? I can pay $1,000 for a milk. Not if I make $12.95 an hour, then no. But if I get paid accordingly, then I can afford $3,000 gallon of milk. No problem. Here it is. Here's 3,000 bucks for 1 gallon of milk. I make enough. I do well. I do well. But you get paid the same, prices go up. What happens? People run out of cash from their checking savings, especially nowadays that, oh man, look at that. Especially nowadays that we have everything. You know, we have computers and everything's getting expensive. So it's not like we're depriving or we're not denying ourselves the things that are expensive. We'll just put it on debt. We'll just figure it out later. And people start losing money. What happens next? After they lose money, and not lose money, sorry. After they start going through their savings accounts, what's next? The Bitcoin, the 401k, even the IRA, yeah, right? Roth IRA, that kind of thing. All of those accounts start to get drawn from, and not all of them, right? Like, that's why the support levels are there for the price. That's why when price goes down, it only goes down so much, because not all of them, right? Not all the people. It's just a large percentage of people are doing that. I think. I mean, I don't. Nobody's talking about this, but or maybe they are. I don't know. But that's what I think is happening. That's why prices are dropping. Now, where they or add to the fact, add to that, to add insult to injury, one could argue that those prices in December of 2023 and November 2020, no, December and January 2023 were hyped up, or were in a bubble, you know, were bubblish. One could argue that. And if that's the case, which is probably the case, then even worse. So the tank is like, you know, we were up in the 18,000s, 18,400, I think was one of the maxes, you know, and now we're back at 17,736. Prices that we saw last year, prices that we were seeing last year. And last year we even got to like 14,000. These were the top numbers, of course, of last year, like the ceiling. And maybe not even 17.7, but maybe, yeah, maybe in 17.5, 17.75 or something, or 17.3, 4 were like the high numbers, you know, even the lower 17,000s. So how far are we going down? Which brings me to my first topic, the Bitcoin halvening. Okay, the halvening. Again, there's no halving, there's only the halvening. So if you look back at Bitcoin halvings, they've all had a bull run that could last up to 2 years, right? So we have, I like to separate the winter and the summer. You got the Bitcoin winter, which usually lasts about 4 years. And then you have the summer, which lasts about 1.5 years, maybe a little more. And during the winter, you see low prices, and during the summer. Now, do you see sunny days in the winter? Yes, you see sunny days. And do you see cold days in the summer? Yes. Even in the summer, there are some nights that you gotta put your jacket on, okay? So it's not peachy, right? It's not the perfect summer, and it's not the perfect winter. And what I think, let me remember this, okay? Remember this. What I tend to think and do is that in the winter, you gather BTC, and then in the summer, you could let go of it, but it depends on your strategy, right? So first of all, the number one question of the Bitcoin thing is, do you have real Bitcoin? Which, by the way, newsflash, Bitcoin doesn't really exist. There is no such thing as coins. What you have is a ledger, a list of transactions that contain the supposed Bitcoin, which is counted in Satoshis. All right? I know that's a little more technical, but Satoshis is really what's Bitcoin. It's Satoshis on a list. That's it. So, do you own the keys to those Satoshis you claim to have? And if the answer is no, I put it on an exchange, I put my money on an exchange, and they tell me I have 10 Bitcoin, and then this is my balance in dollars, I can withdraw at any time, then I would argue you don't have any Bitcoin. What you have is an account with a broker, an exchange, that has facilitated the transaction. Now, that broker might be willing to give you your Bitcoin willy-nilly, like not willy-nilly, but your broker might allow you to withdraw your Bitcoin at any time. And I think probably they should, right? I mean, I don't know regulatorily if that's the case, if exchanges have to give you the actual Bitcoin. I don't know that, but I do know that some brokers make it a lot easier, or exchanges make it a lot easier for you to withdraw your Bitcoin. If you do withdraw it into you and you have possession of your own keys, then you own the real thing. And there's only a certain amount of people that actually have that have Bitcoin in their possession. Now, the exchanges have, you know, a ton of Bitcoin, a ton, right? And especially the big ones, they have a ton of it, but it's limited. The amount of Bitcoin they have, it is limited. It's not like they can print. Some exchanges can print their own money, but the Bitcoin, they cannot print it, right? We all know why, the security in Bitcoin and all that. But I know I'm getting to the halvening, okay? I'm getting there. So only a few certain amount of people have the actual thing. Now, as the years have passed in the last 20 years, not 20, 10, 15, you know, how long has Bitcoin been alive? 10, 15 years? Yeah, 12, 30, I don't know, 13, something. In all those years, there has been a lot of Bitcoin that's been lost. There's been a lot of loss of Satoshis, let's say, the keys. People have lost the keys to Bitcoin wallets, and they are what we think are forever gone. Some people claim that they'll with later technology will be able to recover them, but that's kind of sci-fi. For now, those Bitcoin are gone, and it's not a small amount. Some people claim that it's somewhere around 4 million Bitcoin that have been lost forever. I would probably argue more. I don't know. Think about it. The first time Bitcoin was issued, every block transaction was 50 Bitcoin. Okay, 50. Then a certain amount of more transactions more, a certain big amount of more transactions, then the reward became 25. So half of 50, halvening. So Satoshi, when he was the only one mining Bitcoin at the moment, because he just created it, it's alive, it's kind of like Frankenstein, shocks Frankenstein into live Bitcoin, and Satoshi is getting 50 Bitcoin per block, and at the Genesis block, the first block ever, gave Satoshi 50 Bitcoin, and the thing would pump out 50 Bitcoin every block. I'm not sure that back in the day blocks took longer, but I think it's pretty well known that each block of Bitcoin mining takes about 10 minutes to get to the next block. So that's 50 Bitcoin. I don't know if that was the case in the very beginning or how Satoshi did it, because that was kind of a sci-fi, definitely a sci-fi movie to be there with Satoshi when he created Bitcoin. That would have been probably one of my top one top one moment in history. Okay, no, not top one, top 10 moments in history of humankind. The day Satoshi gave birth to Bitcoin, and being in that room with him, probably a little area like mine here, maybe a little more cluttered, I would imagine. But in any case, he's the one receiving the 50 Bitcoin. He tells others about it. Others start to mine it, and they get 50 Bitcoins for mining each block. Fast forward 4 years, about 4 years. That's how long the number of transactions it takes for the next halvening. Fast forward 4 years, and now you have the Bitcoin reward cut in half. So for the miners, instead of 50 Bitcoin each block, now it's 25. So what happens? Well, during those 4 years, now they were the first 4 years, so crazy things were happening, but very niche. Okay, only very few people knew about it and were aware. But those things that happened during those 4 years made the Bitcoin price have an exchange rate, right? So let me see. When did Bitcoin first got it's not a price, it's a, what did I say? When did Bitcoin first got an exchange value? The new oh, I mean, right away, 2009. That's when it was mined, though. Oh, yeah, PayPal, Bitcoin Talk. Okay, well, that's not really, well, it is an exchange, but it is mediated and stuff, but that's not the real, I mean, okay, fine. So it only took 1 year for Bitcoin, or less than 1 year, because really it was, the first Bitcoin was mined, the Genesis block was mined in 2009, not 2008. 2008, I think the technology was invented, and I don't remember exactly what the thing is about 2008 and 2009, what the exact details of the difference where people think Bitcoin started in 2008, but no, it started in 2009. So less than a year later, we have an exchange rate that you could call an exchange. Is probably a bunch of guys doing their own thing, right? Like trading cards or something like that. But in any case, you have an exchange rate, and during those 4 years, more people got in to find out what Bitcoin is, how it works. They started to mine it, blah blah blah. And then after 4 years, guess what? Now you get 25 Bitcoin, not 50. So what happens is, as more people get involved and the reward is less, the price goes up because miners need to be incentivized to mine the Bitcoin. And it's very complex, but simple. Okay, how should I explain? It's very complex. The mining process is very complex, but it is very raw too. The technology to mine Bitcoin is very raw. You basically need just machines and chips, and it gets very hot. Electricity, you need a bunch of electricity, which is not cheap. But that's the thing, is some people can manage to get electricity much cheaper than others. So even if the mining reward was 0.1 Bitcoin, it will still be profitable because the algorithm has a way to drop the level that it takes to mine the Bitcoin so that it is profitable. It's not just like, oh, if you know, Bitcoin is, you get 1 Bitcoin and Bitcoin is at this price, you're profitable. Or you know, well, can you get cheaper electricity? And it's how difficult is it to mine the Bitcoin? And if no one's mining it, Bitcoin becomes easier to solve, to the point, I mean, theoretically, to the point that you could mine it on your computer again, like people did back in the day. Now, if you try to mine Bitcoin on your computer, you're just gonna lose money. Okay, you're just gonna lose it. Like, you're gonna lose money. You have no business getting into mining Bitcoin, because the players have figured out how to get very cheap, and also the types of models, like the type of hardware that you're using to mine the Bitcoin. Hold on 1 second, guys. We might short that a little bit. Yeah, we might short that. We're in very cheap territory, good price, good discounts. So shorting could be a little dangerous, but we are creating a little bit of a resistance point. And to me, it seems like price still wants to go lower. So we'll see. Right here, actually. Wow. I took an order, but it was delayed. I don't know why. I don't know what happened there. So I got in a little late. That sucks. I think I'm gonna get taken out, actually. That should have been that drop with a little more room. Yeah, I took, oh, that's good. Oh, I did get it. I did get it. Good job. I mean, notice what I did, why I did that, okay? Let me show you why I did that, why I shorted. I wanted to short, I did want to short, but maybe from here, okay? Not down here, but just a little bit above. Okay, but why did I want to do that? Okay, so I have the high put in. It does look like a flip, but this is the actual high. This is the actual high over here, not this one. So we ran that pretty quick, all this, but this is not the important one because it didn't break below here. If this candle had broken below this one, then even this high becomes more important. But of course, this one's more important because it's the one that's after the drop, you know, that little range that we've created. This is the high, that's important, right? Price, where did it go? To about there, right? To around there. So if we were taking a scalp up, we would take our profit here And what happens there? Well, if we believe that our profit should be there, then we believe that our entry should be there for the downside with the right here where price is our stop loss. But now that this has been playing out, could be another chance to scalp up, but the range is getting smaller and there's more likelihood of going down because this high did not run this high over here. But we have to wait because what might happen is that we actually do break this high and becomes more indications of a bullish flip. So that's where we are right now. We do still have some room here to about that 50% of the area that was previously there, but that was such a long time ago. Maybe if we can see it on the 30-minute, it'll look more obvious. But look, I mean, look how far that is. This is February. Okay, in February we were still getting these prices on that big drop, but I think, I mean, I don't know. Wow, in February we were still having those prices? Yeah, I guess so. I guess that was the, yeah. But we never went lower than that. That's the thing. It's like we never went lower than that. February 21 here. But the high is all the way over here. That's the thing. I mean, this one could be an important high. Then we have this, the 50%. Yeah, that's not the one I was thinking about. Well, look, it's now lower. It's really dropped now. So we'll see. That's good for us. Okay, you see, now we have this area before the drop and then becomes our entry. This time it looks like more of a break, I would argue, but we can still range for a while, maybe. Makes sense that it's ranging after that huge drop. So back to the halvening. Whoa, where was I at? So again, the price accommodates sorry, mining Bitcoin is always going to be profitable because somebody will figure out how to make it worth it for them. And you know, of course, now Bitcoin is institutionalized, if you will. It's really not. I mean, people argue that all the time, but it's really not. What's institutionalized is the derivative of Bitcoin. That's a different thing. Okay, a derivative is something that derives its value from another thing, but it's not the same thing. It's a derivative. So Bitcoin derivatives are what really are priced in Bitcoin right now. That's why it's such a high value. I mean, do you think Satoshi ever intended for Bitcoin to be worth $68,000 or $62,000 or whatever it is right now, 60,000? Do you really think he said, oh, this is going to be worth one day $60,000? No, he probably either thought it's going to be worth $0 or $1, or it's going to be worth $1 million. That's probably what he thought. Because he knows, I think he understands humans a lot better than people give him credit for. Now, nobody knows who he is. I don't either, but I do have an idea of him, of what kind of person he was. And I do believe it was one guy. I mean, should me? You know, people say, oh, it's a group of people, it's a woman, it's an alien. It's a guy, in my opinion. It's a guy, it's a 50-year-old guy. Back in the days, now he's a lot older, obviously now, if he's still alive. Which he could be, and very likely that he is. Why not? It's not been that long. But I think I would guess that in his endeavors with Bitcoin, he was around 50 years old. Makes total sense to me that he would disappear. That's why I think it's one person, because the only way to keep a secret is if only one person knows it. Okay, once two people know a secret, it's no longer a secret. That's why I think, because, you know, even the conversations he had with others, he never tell them who he was or what he was about or where he was. And well, he was in Japan, but anyways, I digress. Um, so he doesn't think that it's going to be worth that much. So why is it worth that much? Well, because institutions got involved. Bitcoin was kind of like the opposite of institutions. It was trying to prevent the same shit happening over and over that happened in 2008 with the crash. And that was a global crash. A lot of currencies suffered big time in other countries, right? I don't know if you heard that Zimbabwe right now, it's introducing a new currency. It's called Zigold or Zgold. No, Zig, I think it's like Zimbabwe dollars with the gold or something. And it's pegged to the gold, to their gold reserves. And this has never been done before. Now, back in the day, currencies were pegged to the, the global economy was pegged to the gold price. But never has there been a country that pegs their currency to their own gold reserves. You see what I mean? So it has to do with Zimbabwe's gold, not with the gold as a whole. It's pegged to the reserves of gold of Zimbabwe's government. And people have 21 days to get rid of their old currency and get into the Zimbabwe gold. Only 21 days, because their own coin, their own currency is going to be worthless. It's going to go to zero. And right now, if like 30,000 Zimbabwe dollars equal $1, one US dollar, right? So their currency is gone, like gone. So they're introducing this new currency pegged to their own gold reserves. And it's going to be worth, I think it's 14 Zimbabwe gold coins. I can't remember the exact name. It's like Zig or something, like Zimbabwe gold with a G at the end, Zig. It's kind of stupid, the name, but hey, it might sound good for them because it's in other language. But to me, it sounds kind of weird. In English, it sounds a little shady. But in any case, there's experiments going on in the world. Like El Salvador used Bitcoin as its, reserve currency, which is kind of crazy, actually, very crazy, because Salvadorians are not really ready for this type of stuff. That's why 80% of people in Salvador reportedly, that's what the news report is, that 80% of people are not using Bitcoin. So this whole move doesn't smell good. The whole Salvador using Bitcoin doesn't sound good, but it might be a lot better than what they had. It might be. It actually might have been a really good idea. Whoa, I knew I was gonna take an order, guys, right there. I was gonna do it. Oh man. But you see, it's like it doesn't give you a chance because it leaves, and that's it. You can't get in anymore. Oh man. I was so gonna get in right here. Jeez, the range is getting smaller though, so it's a little tricky. It can leave at any time, and it can have an abrupt movement, or just like tap and go back. But yeah, I wanted that move. I wanted that one, and I could put my profit, yeah, right there where it is. Actually, I would take the profit because it could go down from here. You see? Yeah, the range is getting way smaller, so it's tricky to get in on this, but it's good that I'm kind of watching and seeing it play out. 3 trades, I think. Yeah, 3 trades, 2 losing ones. We'll see if we can step it up a bit. So as I was saying on the Bitcoin halvening, other countries are trying out stuff. Now, back to the halvening, we got the demand for Bitcoin going up as people get more people get involved, just like they did back in the first 4 years of Bitcoin. There's still a lot of people who do not know about this. And the biggest problem is not so much that they don't know, because they can find out. The problem is that the people who tell them what's going on have their own interests, usually monetary, And they lie to people telling them they have Bitcoin when they don't have anything except an account with their broker, with their exchange or whatever, with their business. So people get into an account with a broker that they trust, and these people tell them, oh, you have Bitcoin, you have 10 Bitcoin, but you have nothing. You only have numbers in your account, which may translate into money later, I don't know, but you're playing a gamble. And then what happens as years go by and that company goes bankrupt or whatever, now what do? And you never owned Bitcoin to begin with, ever. You never had possession of keys that would move Satoshis around on a public ledger, on a distributed, uncensored proof of work system. So the halvening, back to the halvening. I keep digressing from the actual topic that is the halvening. It's just hard to talk about Bitcoin without getting wrapped up. So in the past, when Bitcoin did the halving, nothing happens, okay? Nothing happens in the actual event. There's no fanfare, and it's not even a time thing. It's not like when does Bitcoin halving happen? When does it happen? When? No, it's not when, it's what. It's what transaction number are we at right now? And when it reaches a certain number, that's when it happens. So there's no specific date and time. It's more like a transaction number that after that said transaction number, we have a new reward. What's it called? The something bounty? Is it bounty? No, it's not bounty. There's a really nice name for the reward, which I can't remember right now. Subsidiary or something. I don't know. It's just a nice, cool name. I wish I remember it, but the money that the miners get, the Bitcoin that the miners get. So nothing will happen. The next block will be mined as normal, and you better believe that, okay? You better believe that, because I know it from the best of the best, the people who are actually have been in this technology from the beginning, basically, or very close to the beginning, and they kept at it. You know, they kept learning, not just about the price. That's not even in their vocabulary. They're not talking about price. They're talking about technology and what this could all mean for the future of money, distributed money, free money, not free, like free from governments and stuff. Which again, you might argue, no, it's institutionalized. Now the institutions have taken over, but they really haven't. What they have done is created a whole derivative Bitcoin market that is highly volatile still. Now, Bitcoin was volatile too because of how small it was. It doesn't really actually make a lot of sense how volatile it is because of how, hold on one second, guys. Okay, good. It doesn't make sense that it's so volatile considering the amount of people that have gotten involved. It's more about the derivatives and, you know, markets and big institutions getting in and playing on the derivative Bitcoin market. That's my take on it. You might not find this information anywhere because it's just my own kind of conclusion, right? Take it with a grain of salt. This is the Weko show, so whatever Weko thinks, that's what goes. Oh, a little too early, but okay, I kind of trust it. Oh. Yeah, everybody put their order right where mine is too. You got to multiply whatever you do in the markets. You got to multiply it by millions. It's a lot of people do the same stuff you do. Look at that. Yeah. Oh man, not a good day today. Not a good day. 355 in loss. But I'm actually having fun, so I'm gonna keep at this. All right, so oh man, that's the way I get cooked, guys. By the way, this is the way I get cooked. So it's nothing new. I'm actually glad it's happening. I'm gonna take a note and say, you keep getting cooked. Trying, I know after my order, it's gonna go up. Now you see it. Trying to long a reversal to the upside, and you know, instead of going with the trend and just taking the order right here where I had been paying attention to, and then take an order down. I mean, not get from this top to this, and that's it. Instead of losing, winning. Jeez. A reversal to the upside. You keep getting cooked trying to long a reversal to the upside when price is crashing. You look for the stupidest indicators. Not stupidest, for the, yeah, stupid indicators that you make up. So I make them up. Okay. In any case, but look where we are. Yeah, we might go to the bottom of the range now. I mean, we should have waited to see if we did go to the bottom of the range. Ooh, but look at, there's nothing to the left until February 2, right? Jeez. And then now look. Damn man. Look at that. Look at that. I need a break, guys. I need a 2-minute break. I think I'm still, you know, even though I'm in a big loss, I should cut my losses already. I should just leave. But I think I can do more. I think I can do better. I think I can just take one more order. Now, one more order will put me at a 400 loss, but you know, considering we've had 5 profitable days, there is some room to play with. So we gotta pass this anyways, if we are. So look at that, guys. Cheetah. But it's good. We're getting better. We are getting experience. That's how it goes. And we are back. See, I told you it's going to be short. It's going to be short. Oh my God. Just put more risk, I guess. That's the kind of trading I should do. It's just, I do get it right. I just need more risk and just trust my instinct. Because otherwise, how are we going to be good at this if we don't trust our instinct? And then make notes whether our instinct was right or wrong and try to learn from it. Like right there. Okay, I got out of that because I don't know how long it's going to go. Could not go lower, but yeah, I did got out in a good spot. $70? No, that was not a good spot to get out. That was, I thought it was bigger than that. Look at that. Oh, should have held. Welcome to the Wecko Show, where emotions are high. Well, that's not that bad of a loss anymore. I mean, still pretty bad, but less bad. But look at that. You see? That's good that, I mean, I should have put my, instead, I should have chased it with the trailing stop, but then the trailing stop, it gives you even less profit. So like I would have gotten 50 if it had gone just a little bit up, which is very likely during those little volatile moments. And now we have this huge imbalance. Not huge, but somewhat. It's just bigger. Oh no, it's not that big. From here to here, right there. Okay, good. It went through the imbalance. Maybe about here, it goes up again. Unless it keeps shorting and crashing. Yeah, I had a feeling it was going to go up, but look, oh, I'm glad I didn't take an order. Because before it went up, it mitigated the area again. Good, good. I'm glad I didn't get in. Yeah, again, the short was the right move with the stop loss above those highs here. I wonder if we're going to have a deep mitigation of this, but it could go up from this area around here. I think we did hit an important low with that low, that last drop here. I think this is an important low to consider. Good, good. I'm glad I'm not rushing into this. Yeah, this one could be it. Maybe a little lower, but I think we're gonna go try those levels again. Good, good, good. That's engulfing. Yeah, that was the one. That was it. Yeah. So an entry there with the stop loss down here. Get out here. Oh man, you see? I just gotta get in on the right ones, guys. That's it. That's it. Oh shoot. Got the live. Okay, the live stream going on here. Yeah, right there. Take the profit right there. You see? This is not the zone. I mean, the zone is down here, and this is not 50%. This is more like 30%. But I've just been following the the lowest points with this line here to remind myself where we are. So originally I put this line on the 50% to get a tap, but such a harsh move down. This is where I like to take orders going up, and it's where I get cooked. Like I take a long from here, and then price goes lower. You see? But I do want a long because we have these highs to be ran. Now we're leaving a huge candle imbalance, so tricky. I'm not gonna do it though. I'm not gonna rush. Even if I miss it, because I do think we're going up here again. Here maybe. Lower, lower, lower. Yeah, because even the 3-minute candle is pretty consistently bearish. Very closed. I am suspecting definitely a rejection from here. Definitely some kind of movement up from here. Even if it's a shorter up until this area, for example. Once we hit here, I do really think we're going up. It's pretty early still. Did it again. Shit, I did it again. Okay, I got that one. All right, 130, that's good. Woo! Back to the happening. Look at that. Look at my order, guys. I just don't have the experience yet. Okay. I don't have the experience to get them, to not be afraid to lose money. Look at that. And also using such a heavy instrument like the NASDAQ, you know, you can't mess around. It'll take your money quick. But I do prefer the NASDAQ to the micros, because the micros, it's like going up. It's so like you have to be really steady, very methodical, and losing is like it can happen quickly. Like, yes, it seems like it's a lot less loss because it's such, you know, 1/10 the size. It's a lot smaller. You know, coming from the NASDAQ into the micros, you definitely will see a big difference, but it adds up quickly with the micros. And then you have to take multiple contracts, more fees. So it's tough which ones to use. Now, what about the S&P? The S&P, I just haven't done it. You know, I got into trading and I picked one. I just picked the NASDAQ. It wasn't like, oh, I love the NASDAQ, or I just picked it. And one thing I like about the NASDAQ a lot is that a lot of YouTubers in the trading niche trade the NASDAQ. So it's good. It's easy to find good information or just charts relevant to trading using the NASDAQ. So I picked it, I stuck with it. And the S&P, I have not, like, I'm not getting used to it, but I think it would be a lot better instrument suited for this type of evaluation for sure, considering how much, you know, each contract is and all that. So maybe a good idea would be to get trained on the S&P. But again, I like the NASDAQ. I've been doing it for 6 months almost, pretty much strictly on the NASDAQ. So I just want to get really good at this one. Maybe in a year or so I change instruments and then get better at managing instruments depending on the account type, size, drawdown, all that. If we're doing, you know, if we're doing evaluations, but I do want to get into live trading. That's my main goal. Yeah, shorting from there would have been good, but we did have this high to run, so I don't think I missed out on this drop. I didn't see it, and that's fine, because we had this high, even this one, that could have made us drop. So we did drop from earlier, but not a missed opportunity there. This could be another opportunity to go up though, right here. Unless we're dropping, keep crashing. You would imagine there's a lot of buy orders here though, right where we are. That's the cool thing about price dropping. You get better price. You get a discount. Everybody loves a discount. Even the richest people in the world love a discount. Everybody loves a discount. That's the scarcity mindset we all have that we need to get rid of. To live, I don't know if happy is the right word. Just to live a more congenial life. So yeah, back to the halvening. this halvening is not gonna do anything, okay? Because one thing that's different in this halvening is that the price of Bitcoin is actually pretty high. That hasn't happened in the past halvenings. In the past halvenings, the price of Bitcoin was not at an all-time high area where we are now. It is interesting to note though that, for example, in the last one, the last halvening, I think Bitcoin was around, was it the 2016 or no, it was the 2020. 2020, yeah. I think the 2020 halvening, when it happened, the day it happened was $8,000, 8,000 something. And what's interesting is that it never ever was that price again. So it was basically the lowest point. After that, it went up. Now it didn't go up drastically. It took months and even years to get to, not years, but it took months, a lot of months to get to 60,000, and then, or actually to 40, 47. Then it took even longer to get to 60. But what's interesting is that price never went lower than the halvening time frame. Again, it's not a specific time, it's a number of transactions mined. So that's what the halvening happens every set amount of satoshis transacted, which happens to be 4 years. So this time around, who knows how long it will take for the price of Bitcoin to consolidate into the future lows and highs and bull market, if we're having one, and all that. So still bullish on Bitcoin for the long run. So I'm not too worried, because I know in 4 years from now, the price is going to be ridiculous compared to that. But we might be in a winter again in 4 years from now, which will put Bitcoin at a lower price, maybe even 30,000, maybe 40,000. I don't know. I really don't know. But gradually, eventually, we'll reach higher prices, and then maybe get out on a really hot summer day. Get out, not all of it, maybe a little bit, because every time I get out of Bitcoin, I regret it, because it becomes a lot more expensive to own it. So every time you get out, you're really very unlikely to find better prices, unless you're buying in the bull run, which I don't do. Once we're in the bull run, I'm out from buying. Only in the bear market. By the way, this is not financial advice. Remember, please, every time you think about my channel, think that this is not financial advice. Not teaching anything, just sharing my experiences and my trading and my thoughts. 50%, 155 in drawdown. Look at this area here. Look at this. This is a flip looking thing. This is a flip looking thing right here. It definitely is. And especially because on the 3-minute, right? Okay, on the 3-minute, we go farther. We're gonna miss it. Yeah, that's fine. We got the top here. We got 1, 2, 3. We'll consider this. No, it's actually not. Let's say 1, 2, 3, 4, 5, 6. So we're in flip territory. Let's look at the 5-minute. 1. Let's count this one. Yeah. Let's just 1, 2, 3, 4. Yeah. Maybe a little lower though. I mean, here definitely. I don't think it's gonna go past this. I would be very, very, very surprised if price went down through this thing. Good. I'm glad I didn't get in, because that's how you get cooked. That's how I get cooked, actually. Not you, but me. We'll see if that low holds. It didn't. Wow. Yeah, no, I mean, this talk about a crash. Talk about a crash. Oh my God. There were news events today. I didn't even check. Oh my God. I don't want to fail this evaluation in one stupid trade for not checking the and I think there was some kind of event. Oh man. Stupid. Wow, there are. Okay, there's one at 1 p.m. No wonder. There was a CPI report, and I knew it. I knew there was because yesterday I saw it. And of course, we have this crazy action, volatility, and volume. But there's one at 1 p.m., so we gotta get out of here. We still got plenty of time, but I don't want to be here at 12 just in case, because I know it's Central Time, and I know I'm in Central Time, but I still don't want to trade at 12. I don't want to fail this evaluation on a stupid move like getting in on a news event and then bam, terminated. So yeah, so we'll see what happens with the Bitcoin halving. The next topic is my ideas for this channel, this YouTube channel. So I've been trading live. Thanks for watching. You know, either now, hey, welcome, or later in the future you might watch this. But what I want to do is I want to keep trading live. I want to keep these videos going. I do have a Patreon, so if anybody wants to go there and support the dream, fund the dream, you are welcome to get in there. I will put every single video that I make, I'm going to put it in there, because I want to make Rumble rants videos where I rant and maybe shoot this stuff, like make topics that are way more controversial than the ones I do here on YouTube. Still not financial advice, but just some raw content, you know what I mean? Raw content. So that'd be great to do on Rumble. I'm still kind of working on it, but I do want to post more videos. So if you are new to the channel, if you subscribe or whatever, just leave me a comment or whatever in case you want, you like some certain type of content, considering what I'm doing right with this setup here. Like, oh, you know, one thing I'm thinking is to make some videos about indicators so that I teach myself about indicators. I don't use them, as you can see. I just trade the raw price bars, but I would like to learn about indicators just to become better, get a better sense of how the market, how you can determine the market conditions. I think the indicators are great for that. They can teach you what other traders look for to take entries, and that could tell you more about how the market moves. That makes sense? Okay, so, and then maybe another, wow, look at that, that's a flip. It didn't, I didn't like that this candle didn't break this, which happened to me last time I got cooked. So I'm not gonna take a long position because this candle did not engulf this one here. And look, no, only wicks, so I'm glad. We did run this high though, so we'll see what happens here. Price really wants to go lower today. Wow. Wow, wow. This is cook territory for me. I mean, I'm glad I'm not doing that bad, but this is the kind of environment I get cooked on. Maybe you know, maybe don't trade today because I already put in 10 trading days on my account, so all I gotta do is make the money. So now I gotta be wiser about when to trade, I think. Especially, you know, maybe today was not a good idea to trade. And I was thinking about that yesterday. I was like, there's a report, possibly two, because I remember seeing, I'm gonna show you guys. I remember seeing this yesterday because we were here, so I checked for yesterday. And then, because today's not the 10th. Oh my God. So today's the 17th. All right, forget everything I said about the CPI and all that. That was the last Wednesday. Sorry guys. I thought we were here because I remember like here and then seeing that there was something, and then I thought it was this. I'm sorry about that. So no reports or nothing. It's just the crazy nature of the market. Sometimes it crashes. Well, that gives me better hopes for today, actually. Oh man, you could also put it in the chat if I make a mistake, guys. I need to be corrected sometimes. Lower. There's an interesting area on the 30-minute that we have to watch out for. Look at that. That's that same one that's all the way back there. I remember now. So yeah, I mean, that was a good point. Maybe once we saw this and the lack of break of this, I mean, I did take a short from there. It was just not the short that would give us this kind of money, but I did take a short from here. But imagine looking for that short as the swing trade. And I think price is headed all the way to the tip of that thing, like right to the tip. And when it does, it's going to get a little wild. You know what I'm saying? So yeah, videos on indicators, videos on maybe how to set up your Ninja Trader setup. That one actually I already recorded. I don't know if I like it a lot, but I'm gonna work on it today, see if I put it up. But yeah, I really want to, you know, dedicate to this, to just trading and content. That's it. I do other things right now. I'm a freelancer, contractor, but I'm done with it, you know? I'm done with it. And it's not like I want to be lazy. I still want to work. I just want to do my own thing. I don't want to deal with clients. Look at that. Wow. I don't want to deal with clients. I don't want to deal with people being late. You know what I mean? It's okay. I'm always going to have to deal with people being themselves, but not in business. Oh, I keep doing that, guys. I'm going to make sure I don't put the information or under my face, pretty much under my camera. Sorry about that. So I don't know why I kind of feel like I'm missing something. Like there's something I'm forgetting. Yeah, so I just want to make videos and trade. That's it. That's all I want to do. So stay tuned for the channel. Subscribe if you haven't. Also Twitch. I want to like game on Twitch every now and then, maybe once a week. I'm not a big gamer or anything. I'm not like good or anything like that. But I have an Xbox and I like to every now and then. So I figured, hey, why don't you just play live and add it to your content? Oh, I told you guys. I mean, it's not the bottom, but it's definitely getting a huge reaction right now. Super engulfing candle on the lower time frame. Let me show you. You see that? How engulfed this one? That's more the type of setup that we think is gonna be bullish. But we still have all this area here, which I think we might cover today. But we're definitely looking for what happens. Yeah, it's gonna go. Jeez. Yeah, there it is. There it is. I knew it was gonna come down quickly. Yes, good. You see, because everybody's thinking bullish right now, but they're not willing to wait for the area, for the real area. So markets definitely at the bottom. You can see all the pressure from the buyers. Now. I told you guys it was gonna get crazy. Told you it was gonna get crazy. Look at that. Jeez. Too early, but I don't know. I don't care. I'm playing the zone out. I'm playing the zone out. Let's see. I don't care. I don't care if I lose. I might get taken out with the stop loss, but that's fine. I'm not doing too bad here. I'm already in profit. Okay, I got out. That's what I'm doing. That's what I'm talking about, guys. That's how you do this. Oh, I messed up my my monitor. Sorry, I got excited. Tell you guys, this is an emotional channel. You're gonna see a lot of emotions happening. Woo! That's the thing, man. You gotta be patient in this freaking trading business. You can't be just willy-nilly taking trades. You gotta be patient. Discipline. Like the army. All right. So anyways, what I was saying is this channel is gonna get better. All right, so stay tuned. What was it? Oh yeah, one more idea is shorts. Okay, I'm gonna start thinking about making shorts in this channel. That would be good, right? And one thing I like is maybe I do a setup where you have to guess. Like I'll give you a setup and then take a guess whether it's gonna go up or down, and you have 5 seconds, and that could be. And then I explain the structure, which is playing out pretty well for me, as you can see. Man, that order could have been even way better. Look at that. Every order that I take nowadays renders so much reward with little risk. I think I smashed my my table and my monitor turned off. Now, once we hit this area here, we might look for a short, but now, you know, murky waters now. I mean, that was the trade of the century right there. All we had to do was be patient for a while, keep talking, and look for the area, take a bet on the area only, and then go. By the way, that last trade was Well, I think it was 275. That was the last one, right? Yeah, I think so. I I don't think I can see. Let's do some reading actually. I want to find out about trade days um, rule on the profit taking less than 30%, which is the consistency, right? Okay, look, it says, I'm gonna show you guys. So it says, in order to avoid inconsistency affecting your profit target, you should make more than 30%. Oh, no more, sorry. You should make no more than 30% of your profit target in one day. For you, that value is 750. Okay. How is this calculated? You will be marked as inconsistent when the profits from your most successful day make up more than 30% of your total profits. Currently, your best day accounts for 114% of your total. What? What? How is this possible? So what does that mean? I don't know what that means, guys. Because it says 30% and I'm at 114%. And this is not, I mean, this cannot be true. I mean, oh, I see. I see. I see. Because my profitable days have been very few. I think that's what it is. It's because I've only made money on 1, 2, 3, 4, 5, 6 days already. Wait, what? No, I don't get it. I don't get that. I'm gonna have to give all my consistency. Oh, I'll keep trading. Well, I don't know. I really don't know. What I wanted to find out was whether it counts, for example, here, I have 575 in profit, but this is my P&L, right? I only made 87 bucks so far today. So it's counting the 500, I think. It's counting this number as my daily P&L, I think. I don't know. Oh, maybe because it hasn't closed today. Mm, I don't know. I'm gonna have to find out what that means. 114%. Shouldn't that be like a 20% or something? You will be marked as inconsistent when the profits on your most successful day make up more than 30%. Currently, your best day accounts for 114% of your total. What? I've never made more than that. So how is this happening? This will occur even if your total P&L has a negative value. That's what I was looking for. This will occur even if your total P&L has a negative value. Is that why? Is that why it's 114%? But I never really had days where I traded so much more money like that. Like my profit hasn't been like 1,000 or anything. Has it? I have to check. That's crazy. Maybe I'm like doing this all wrong. But hey, I'm making money, so I don't care. Even if I don't pass this, if I can make the money, it's good experience. What happened to the music? So if we take that into consideration, that would mean that we can only make like $100 more today. No, yeah, but it will probably hurt us too if we make more money, if we're already at 114%. I don't know. Maybe somebody watches this video and comments on that and lets me know what's up. Am I doing this all wrong, guys? Maybe. We didn't run the high here where the candle closed to the downside. So this is an important high that we got to watch out for. Could be the place where price does trade lower, which is currently heading over there. But we could also get another rejection up and trade higher now. So maybe something like this. Something of a reversal, maybe not a full reversal, but just an attempt to get to this highs over here. So consistency. But see, it says a profitable day. If a trader reaches the profit target of 2,000 and they made 800 in just one day, then the evaluation challenge is not finished. 800 of 2,000 is 40%. I think, I don't know. I really don't know why my thing is 114%, because that makes that shouldn't be there. I mean, I don't know. I don't know what they're calculating. Oh, okay. All right, we'll see. And then the last topic of the day is oh, this is a good one. This is a good one. A sense of urgency. All right, so I don't know about you, but when I have met successful people, and even if you see them on TV with interviews or something, but a lot of times their background, like their family history, the way they were brought up, like when they were kids, tells you a lot about why they're so successful at something, whether it's making money or building something or bringing a new technology, whatever it is, or even a sports, like an athlete. Yeah, I wanted to take that, guys. Might give us another chance, but that's a good spot to long from if we are going higher, which I think we are. I mean, we hit, look, I mean, we didn't hit it, but we're very close. So, well, you know, we might still hit it actually. But you see how crazy it moved when it was here. I mean, you might not have seen it because I had longer time frames, but if you had seen the short time frame, it's a lot of movement. So yeah, successful people have this something about them, the way they were brought up or whatever, that makes them successful, because they have a void that they're trying to fill. And as traders, the sense of urgency also comes from the fact that if we don't make money, we don't make money. And the worst part is we lose money. So losses, like doing bad in this business, is not like other, for example, like let's say you have a bad day at the office and you're a consultant at a company and you have a bad day. Well, yeah, maybe you miss out on some bonus, on a bonus that you were going to get if you made the deal happen, but you didn't make the deal happen. So, but you still get your salary. On most jobs you do, you still get paid even when you have bad days. you still get paid. And then good days, you have good days and you still get paid. So, and sometimes the good days don't really pay you more than bad days. You just get paid the same. But in trading, bad days, it's like going backwards a little bit. And that's the mentality of the or like that. Well, that's what I was gonna talk about, the urgency. But the thing is, like, we do have to have some urgency to make money. Well, what I mean is this. So what I was saying about the successful people is they have something in their past, a family thing or something very strong when they were kids, that prompted them to go after a goal or have this burning desire to accomplish something. And I don't really have that. I'm actually pretty content with the life I was given and the love I got from my parents and the way I grew up, and having a lot of love in my family. And all of my family is like pretty chill. When I was growing up, like, my dad was chill. I mean, he could get angry, right? He could get angry. But for the most part, he was a chill person. My mom is chill. My sisters are chill. So, because we're all chill, we don't really go after big goals and, like, have this all or nothing mentality about achieving them. Yeah, we're okay with it. We're okay with the process, the journey. Oh man, that was, yeah, you see, guys, I told you guys, too long from there. Wow, now he's living from down up here, so he could live down lower. So because of that, because I'm pretty content, I don't have that sense of urgency. But I think when I do have a sense of urgency, for example, if I'm broke and I gotta pay rent, somehow the urgency of paying rent makes me make money to pay rent. Does that make sense? It's like having the urgent need for something finally makes it happen, where you get that something. You see what I mean? And with trading, that sense of urgency, I think it's what most people fail at this. Most people fail at this because they say, okay, I gotta pay rent, so I gotta be good at trading. But what if you gotta pay rent and then you have bad days in trading? Not only you have to pay rent, now you don't have any money to pay your car bill. You see what I mean? You see, that's what I'm talking about. It's like the sense of urgency could be the one thing that doesn't allow us to be profitable. I kind of want to short from here, but it has characteristics of a flip. Like right there, I was short. Right there. Right there. Right there, I was short. Right there. Yeah, good. It went higher. Right there. Okay, I'm glad I didn't. Oh, I'm glad I didn't. I mean, I'm not glad I didn't. Okay, we'll see. I don't know. It's wild territory, guys. Wild territory. We're at the bottom of the range. Look at my order, guys. Shh. Even coming back to not even the entry. The entry is like perfectly placed, and then keep getting profits. Live account. So even though I'm doing good in this evaluation, making money, I still am not ready for a live account. And I've done live accounts and I've lost money already. Okay, money that I didn't, I mean, I could afford to lose. It's pretty substantial. Like, I'm not gonna divulge how much, but I'm just gonna say it's not like $100. Okay, it's a lot more than that. So it's money that I didn't need, but now that it's gone and it's been, it's gone for a while, like it's settled in my psyche now, and like, I could use that money, I could have used it and for important things, not pay my bills, that's taken care of, but you know I could have used it some other way. And that's the thing, is I cannot have the sense of urgency to be good at trading to pay my bills because I'm not ready. Mainly because I'm not ready. And that's why I cannot let these wins get in my head, because I'm starting to get thoughts about having a sense of urgency to just do trading, quit everything else, and pay my bills with trading. But we're not ready. So the slow process, I think, is better for me. I haven't even been in this journey for a year, and I can see already a lot of differences in my performance, in the way I understand, the way I look at the market. So now I just need more experience doing the same stuff over and over. And then maybe 6 months from now, yeah, something like that. 6 months from now, get into it full time, no more kidding around, live accounts, big time, heads in, diving heads in from the cliff, which I do, by the way. I'm somewhat of a cliff diver. Next time, look at that. Next broadcast time, I show a video of me diving, heading to from a 20 feet or 30 feet, 30 feet cliff, pretty high. And I dive, and it wasn't 30, it was probably 25 feet, something like that, but still pretty high. So I'm not really afraid to dive. Most people are. They jump, right? Most people jump from a cliff, they jump with the feet first. I don't. I jump head first. All right. And actually, once you get good at it, it's so nice to dive. It's like I go in the water and it's like smooth, like it's like going into a cloud that you don't feel any. Now sometimes you don't, like sometimes you'll slap your arm or your shoulder or your back, something like you don't even notice, but you still dive pretty good. It's not like painful or anything, but yeah, I mean, you hit yourself with the water. But every now and then I dive and I get in just like, and I feel nothing, zero strain, zero impact on my body from a dive, from a 25 feet dive. And that's what I want to do with trading. I want to dive in head first and just, you see what I'm saying? There's no other feeling like it. You can jump feet first all you want. And it's actually, there's a difference. Like when you go feet first, you get that little sensation in your stomach when you're dropping, like when you get on a roller coaster and it's going down, you get that stomach feeling. When you jump feet first, you get that. So that's kind of cool. I mean, when I jump feet first, I like that about it. I like the little feeling of falling, basically falling on your feet, and you're like, oh. But head first, you don't really feel that. You're like more determined. You feel like it's like you gotta go for it, because if you don't get that right, like if you go on your feet and you miss it, or something happens, or you slip, you might survive. You might break a leg or something. But if you go head first, that's gonna be a tough one to survive. It's gonna be really tough to survive. So there's a determination aspect to it. And I want that in trading. I want to dive head first. So possibly, I'd say 1 year of experience should be enough for me to just go in. And that wraps up the topic of urgency. That's what I mean by that. It's like we need to like have a sense of urgency, even though we don't have it. I mean, like I said, I'm not a very like, it's not like I'm not rushing. That's what I'm trying to say. I'm not in a rush. I'm not in a rush. But I do want to get out of my current job to get to just do trading and stream every single day. And that would be it for me as far as business is concerned. So I don't know if this is a flip or not, but I think I'm gonna call it a day. 120 in profit is pretty good. We covered all the topics. Good day of trading. A lot of trades actually. We took 7 trades. We were in a drawdown about 300 and something, and especially with this stuff here that it says that I'm 114. I don't know why it says that. Where does it say? Right here. I don't know. So I'm just gonna stop with 100 and something profit and call it a day. Thanks for coming in, guys. We'll catch you on the next one. Stay tuned. Peace.